long memory from being gated in a global financial crisis. So I guess that still gnaws at some investors, even if it shouldn't. But again, if you can't afford to be illiquid at the moment, but you want to be tactical, it seems like you guys are a very good choice.
It's interesting because our approach and the way that we trade is extremely highly liquid, and we've always passed that liquidity on to our investors. So, our minimum liquidity is monthly. We have monthly liquidity to our fund, and we've actually run funds in the past for pension plans in European structures that had daily liquidity. It was never used as such, but we had intra-month additions and withdrawals. But in terms of the markets that we trade, we're able to provide even daily liquidity. I don't see an advantage right now to going to illiquid assets with such uncertainty on a longer term basis. I understand Sylvia's point about the timing, that you don't want to time private equity, but I think we might be in a situation where you can have a multi-year event where the asset class doesn't return, and we don't find a true intrinsic value to the asset class until much later.
Right. I mean, but I guess you can. I vividly recall the post GFC, discussions about this, where we would have one big private equity manager arguing you should double down on your allocation in moments like this, and then we had the head of asset allocation from MetLife who basically said, 10% of private equity, that's what I'm going to stick to it, 10% year in, year out. And I think that's really much more what we're getting. It's not that people are trying to time it so they allocate more. But I think perhaps this notion of denominator effect, which people were so afraid of 10 years ago, I take Sylvia's point. I think that, or whoever it was that made the point, that there's been more comfort toward having more of the portfolio illiquid and really saying to yourself, the question is really, how liquid do I have to be? Because if I'm a long-term investor, my great competitive advantage of the world is my size, my ability to take the illiquidity premium, right? I think that's what we're hearing a lot. So sort of slow and steady wins the race, maintain pacing, again, the strategic asset allocation point seems to be, really, somebody even asked the question about, mechanistic rebalancing to kind of take the human emotional factor out of it, that sort of thing. And I think the CIOs were just kind of, nope, let's just take an eye out.
You need to consider human factors.
What's that?
You need to consider human factors at this
time.
Yeah,
exactly. Not be emotional, not try to time things when you shouldn't. I don't know if you were around for this. There was this famous story that was told by the chief investment officer of Caltech, which is one of the world's great, academic institutions. The average math SAT is like an 800 there. Brilliant people. He said that Caltech de-risked its portfolio in 2006, 2007 because they saw problems coming, and they went to 30% cash in 2006, which made them look like geniuses when the global financial crisis hit. The problem was in 2010, they were still 25% cash. That's the problem.
So there's no hope that they stay 5% cash into COVID because then they stay the course. Then eventually you're right.
I think I'll start with
All right. Thank you. My last question to me is a wrap-up question. So far, we talked about a lot of risks, negative things. What about the opposite? What about the opportunities? Where is our hopes and dreams? We still have such things at this market. What is our opportunities? What area will be hot in the near future, 6 months, 1 year? How do you think it could be among different asset classes or among different strategies?
I'll just say quickly, what we were hearing for about 5 years was everything was priced to perfection, and then everything is priced, everything is overpriced, right? So at a minimum, those situations create investment opportunities where some people will be able to buy well. Across asset classes.
How do you follow?
Some of the ideas that resonated the most from what I was hearing here are the communication, the technology, the infrastructure. I think, as Brant was saying, as Sylvia was saying, this is going to be a longer term event that is going to change the way that people think. And I think some of those assets will certainly come out of this strongly, when the tail event of this occurs and we start getting out of this. We don't necessarily have to all go back to our offices. We can perhaps work from home. Those two hours that we spend commuting, if it's that small, can actually be spent more producing more productivity. It's going to be something that is interesting, at the tail of this event. In terms of the strategies, and again, it's a personal bias, but I think in the meantime, in this period of time until a vaccine is created and widely distributed, you want to have strategies that can trade the market from both sides, not only being long, but being both long and short opportunistically and quickly in asset classes like commodities, fixed income, currencies, and certainly in equities, you want to be nimble in this market. So I think at least in the next 18 months that hedge fund strategies, absolute return strategies, with some skill from the manager can produce some good returns.
Thank you. Sylvia, you have comments on that?
Oh, sure. Yeah. Just really quickly. I mean, aside from the obvious sort of, distressed or, more dislocation opportunities, again, if you have the right partner and you can identify, that you're not catching a falling knife, certainly there'll be a lot of those opportunities. I'm not sure exactly when those unfold, but across different collateral types, including real estate, there will be opportunities. But the two very specific opportunities that I think are really interesting right now is, one is called portfolio finance. And so what is that? That is where you go in and you provide liquidity to a private equity fund that, now their distributions, now they may need follow-on capital, but they don't have any. They need to, their fund cycle has elongated. So providing liquidity to get those portfolio companies to the next stage without having to prematurely exit. Certainly don't want to exit now. So that idea, that concept of providing financing to private equity funds, I think will be huge. The flip side of this, and this is a very interesting situation, is that, historically, in order to rebalance, people have had to do secondary sales, so you're basically taking a P&L hit. That usually is not a very good thing to do at this time. So you're usually having to hit the secondary market at exactly the wrong moment. So the secondary market was obviously very hot, obviously now that, who knows what people are going to be valuing. So the other trend that we're seeing is an alternative to secondary sale. So again, the same idea as private equity portfolio finance, but the opposite, meaning you go to a CIO of a public pension plan. They have a number of what they call either tail positions or just, core holdings that they like. They can get a pref equity loan against those positions. So, and they move that into an SPV. So the other concept of letting them tactically rebalance without actually having to take that P&L hit. The other area I think is really interesting, and Brant, you'll like this because you're a former lawyer or current lawyer rather, is anything to do with legal asset. So litigation, finance. Anytime you come out of any kind of crisis, there's going to be a lot more law. I mean, think about all the legal claims that will be coming out all over the place in terms of, entertainment, worker, all kinds of things. So that's also a very interesting area that could see, that's not as correlated to the macroeconomic environment, but also actually maybe somewhat benefiting from, a more litigious environment going forward. Those are very specific situations.
Okay, thank you. Is AXA doing the private equity financing this time? Do you have such a need?
We're not doing that, but there are fund
You're not doing that.
No, well, we're underwriting fund managers that do provide that service. So just like direct lending managers, they happen to be, providing capital that way. So it's just part of our strategy opportunity set that we diligence. But we ourselves are not providing that, but there are GPs that do that.
Right.
Sam, may I ask Sylvia a question?
Yes.
Sure.
Go ahead.
Well, you asked about stressor. I'm just curious because Sylvia, private credit was so active before all this, and obviously it's cash flow dependent. Where within the folks that were looking good and getting allocations, where do you see the distress among the folks that were the most active? particularly, direct lenders to specific companies, things like that? I'm curious.
Well, I think it's a little bit early right now. I mean, just because the assets, there's been a lot of sort of looking through people's portfolios, but I think it's still very early to see. We haven't seen obviously BDCs have traded down huge. We have not been that active in BDCs because that structure has been more of a retail product in terms of the publicly traded BDCs. So I think time will tell. We have shifted our focus away from lower middle market direct lending. It's obvious that probably smaller companies will be more vulnerable to these types of write-downs. So I think right now we're only about 8 weeks into this, and so whether or not you're going to trigger defaults, et cetera, and with recovery it'll be very duration specific. But one thing that's actually kind of interesting, I didn't think about this before either, on the rescue side, is that because of all these loose covenants, the rescue finance is really interesting. You can go in and you can basically go in either super senior, pari, layer on more debt, specifically because there were such loose covenants. And so you can take the flip side of that now and be a beneficiary of those loose documentation.
Where some folks that probably should be in default may not be in technical default because they're covenant light. That's one more quick question, Sam. On inflation, deflation, stagflation, whatever, with all the central governments printing all this money and lots more to come, I assume, is anybody worried about
That's
inflation?
another thing we have to discuss about. Anyone has any idea about what we will have? Do we have inflation, stagflation? What about Chang Dong-won, Mr. Chang Dong-won? How do you think about the macro?
Well,
the Korean market, the prime rate is 0.75%. And what is our inflation these days?
Well, market consensus is that just to worry about inflation issues. However, based upon my previous experience, there are some possibility that the market could moves in some extraordinary direction. So that means, in considering that huge money, printed by central banks. So
deploying to the market.
Right. So I think we'll see. However, I don't think this kind of lower rate will go forever. I doubt it.
Yeah, one of the comments that I got back on this was there's going to be so much destruction of demand and supply that the bigger worry is deflation.
Paul, do you agree that?
Yeah, I think the worst case scenario is that we get stuck with rates going up with inflation, but not growth, and that stagflation. That would be the worst case scenario. I'm hoping that we can avoid that, and that the resiliency of the market does come back when I think, as Brant said, when people say, okay, we're willing to take risk again and go back to a more normal type of living experience.
And Silvia, how do you think the probability of we get the worst case scenario, stagflation?
I think it's look, I'm not an economist, but I think that's certainly possible. I think it really just depends on how this all plays out, and and how long it all takes, right? So it's just, and we don't know. We're fighting what President Trump calls the invisible enemy. You just don't know. So it's really we just don't know what's going to happen. So.
Right. Okay, let me wrapping up. By the way, we have 2 hidden audience in our webinar. Let me introduce those 2 people. There is a Mr. Ted Lin from BCC Global. He is founder of the BCC Global. He's from China. And we have another person who is Mr. William Plummer, the Marathon Venture Partner. Have you heard about the company name? MVP, Marathon Venture. Hi, how are you, Bill? Can you hear me?
Thanks for a great call.
Yes, where is Ted?
I'm here. Well, thank you very much for introducing me.
Okay, so you guys are in China now, in Beijing?
No, so I'm personally in Taiwan right now,
You're
given
in Taiwan.
the situation. Yeah.
Okay, Patty is in Taiwan, and what
That's
about
right.
the Bill?
I'm in
William.
California right now, but our fund is in Shanghai. I am in forced exile, given that foreigners can no longer get back to China.
I see. So you're enjoying your vacation in California after this pandemic?
Enjoying the sun. I wouldn't call it a vacation, but enjoying the sunshine for sure.
All right. Okay, because we are wrapping up our session, so let me give you, each of you have a opportunity to ask one questions for each to our participants. So why don't we start to Mr. Plummer, Will Plummer? Can you ask one question? Do you have any questions to us?
Yeah, I have one question. Sorry, let me put on the video. One question broadly about the global fiscal and monetary response to not necessarily stimulate demand, but to make up for lost demand. So clearly the US has taken very decisive measures, I think, to support lost GDP. How do you feel the rest of the globe has been doing in supporting domestic demand? Because at a global level, I feel the US is doing well. China has certainly stepped up demand. So for our particular industries, so we do venture capital focused in China. So for our industries, I think things are looking good, but I worry a bit for global demand. And so I was wondering where you view, whether you feel governments globally have done all that they can or should do to support demand at this time. Thanks.
Can anyone answer that question? Sylvia?
Well, that's kind of a hard question. I was just thinking about this in the US. It's like, you know, you can't force people to go to Disney World and go to a crowded restaurant. So I do think the government is obviously with the stimulus checks doing all that they can to get people through this. But I think in terms of stimulating demand, that's going to really have to go hand in hand with some assurance that we've been able to do widespread testing. So because demand is really predicated upon people being able to leave their homes, right? Besides being able to order on Amazon or go to the grocery store, there's not a whole lot of demand for anything else right now because you can't go anywhere. And that's because we don't have, I guess the three tenets, which is you need the testing and you need, eventually you'll need some kind of vaccine. So, so I'm not so sure it's just all up to the government to stimulate demand, besides trying to find a solution to this, to the pandemic.
Can U.S. government stimulating, can they do the offshore demand, do you think? Is there any way?
Well, demand for what though? Demand for?
Consume.
Yeah, well, you can't consume though if you're all locked up in your house. Yeah, so it's almost like forced savings in a way. It's a transfer. So instead of going out to eat dinner, you're just at home. So I guess in that way, eventually there could be future consumption. But again, I think the demand side really has to come from people being able to move about freely and travel and do what people usually do.
Let's see. Brant, do you have any comments on that?
It's a big question. I'm not sure I'm the right guy to answer it. So I don't want to try to give an answer to a question I don't think I'm equipped to answer.
I see. Thank you.
Sorry.
Thank you.
But no, I think, the comment I made before about, I keep thinking about behavior. I mean, to me, so much of this is about behavior, right? Like, I have a couple of grown sons and they feel like they're not going to get coronavirus, right? They're not in a high risk group. I saw that in Michigan and Ohio, there were all sorts of demonstrations about people who didn't want to be told they had to shelter in place. again, that thing about going out after 9/11, going to work, I mean, I think people adapt, and we'll see that there are high risk groups probably, and there'll be a lot of other people that will take risks. So I guess it'd be very interesting to see whether Sylvia's right or I'm right about New York City, for instance, right? I have a strong belief that New Yorkers are not that they're going to be back in business, whether that's smart or not, by midsummer, by mid to late summer. I just and accepting whatever risks they have to accept to be in business.
You mean the back to origin?
What's that?
You mean the back to origin, 100% recovered?
I think,
No.
look, I think people live in dangerous neighborhoods. People, drink polluted water. They do. I mean, people take all sorts of risks in life. This is a new risk. It doesn't automatically kill you. Obviously, there are, we don't know enough about it. That's the big problem, right? And I also, this is just my instinct, is that a lot of these measures are because we were overwhelming the capacity of the healthcare system. So by slowing things down, the healthcare system caught up to the problem. So I think it'll be like one more risk in life that people will adjust to. That's my instinct. But just an instinct.
Okay, thank you. Mr. Plummer, did they answer to your question?
Yes, and certainly in part. So thank
Yes
you
or
for
no?
that.
Okay, thank you.
It's a big question, so it's it's not something we'll answer today.
Let's talk more later.
Sure.
Next symposium or whatever. Hi, Tad, you're the last one.
Okay. Sorry, I just got out of bed not long ago, so probably not the best situation to be seen. But my question is, given the virus situation, I feel like the U.S. and China are even at bigger odds than before, and how they handle the health and economic affairs have created different, even more bifurcation between these two countries. How would you, so for two questions, right? One is, do you feel like there will be a bigger divide between these two economies, and how the rest of the world will react to it? The second thing is, given your assessment, how would you allocate or reallocate your asset investments?
Okay, so who's gonna be first? Mr. Chang Dong-hwan, do you have any comments there?
Basically, I think, after this virus issues, I think, the conflict between two superpowers, I mean, will continue for the time being, and maybe, it's not going to be, lessened. I think maybe that kind of conflict will continue for the time being. That's my basic scenario, and also there will be a lot of reshoring efforts by companies to make to change their whole supply chain. So maybe trading pattern will be dramatically changed in within such a short period of time, I think. So every corporation will change their supply chain system. So that will change it. Trading system a whole lot, I think. And for those your question, you raised questions on that what asset allocation for after this kind of coronavirus issues. Is that right?
Yes.
Well, as for those like POBA like institution which heavily dependent on private market, as Sylvia mentioned, my feeling is that best way to minimize the risk from human, and also psychological decision making can affect negatively on our decision making, I think. So I think POBA will maintain and consistently invest what we have been doing before. We are not trying to time the market. We just to diversify time and the region, asset class, everything. So thereby, that's I think the only way that we can do at these stages.
I see.
Thank you.
I see. Thank you. Anyone have any comments on that? Otherwise, I think we have to say bye, wrapping up the session. Okay. Thank you. Thank you. I appreciate your
Great.
time.
Thank you very much,
much.
guys.
Thank you.
And then we'll talk again. Thank you.
Okay.
Thank you.
Thank you.
Frank, Sylvia, and Paul, and 서정두
Thank you.
사모님, and 장동원
Thank
본부장.
you.
Thank you.
Thanks very much. Bye.
Talk to you later.
Bye-bye.
Bye.
Bye-bye.
Bye.
딱 맞췄죠, 시간.
야, 진행이 장난 아닌데.
저기, 대원.